Hey there, and good afternoon, everyone. This is Trader Tim from eMiniMind.com. Today is Monday, October 16th, 2017, doing a market analysis video to kick off the week. While it may seem that the market is overextended or couldn't possibly go any higher, that's precisely when you should expect it to go higher. So, in this recent run-up, we've talked about how the market has really become extended by the trend line itself getting steeper as one way, as we see here. We've also talked about the negative 23% target. Once we've passed that, that 25.75 is kind of our next target. Potentially 2600 is a big round number. So there's the ability for certainly the potential for the market to continue upwards here. It's also possible that we drift sideways back to more of the little bit shallower trend line, like so. And if the market were to kind of drift sideways into this trend line and then get a bounce higher, that would be a very likely scenario. I wanted to highlight a couple of setups from today and Friday. We first go back to Friday, I've got drawn up here. Overnight, Thursday's lows to Friday morning's high formed a nice pullback right to the 50%. Now, you don't always know if the market's going to adhere to a previous day's low or an overnight low. So what I like to do is let that bigger level, let this bigger setup trade identify that, okay, yes, there is a reaction there. There are buyers coming into the market. And then you can just zoom in, and this is a 512 tick chart. Zoom into the 512 tick chart and just take the first retracement setup off of that level. Notice that we've broke the swing high, meaning this high here has broken the previous swing high. And we pull back to the 50%, and then we're on our way in that same direction as the larger retracement. And that's a good way to lower your risk. You'll notice that we're still entering pretty close to the 50 itself of the bigger 15-minute, but this is a better way to reduce my risk on the trade versus just jumping in at the 50 in a blind limit. The other setup I wanted to talk about is from this morning. And actually two setups. Right at 15 minutes after the bell, the market pulled back, got a small bounce, and then sold off. So that long that touched right at 7:45 only moved a couple of ticks upwards and then turned around and got stopped out. So when a trade does get stopped out, or when the market does break a 61.8, that's a great opportunity to kind of flip the switch and start drawing setups in the other direction. So we had a little short that didn't make it up into its first bounce, if you will. The next short, or the first short really, the first opportunity to get short was from the swing low before the 61.8 break. So if I zoom in just a touch more so you can see this clearer, the market moves up, pulls back, getting long at the 50% here, 25, 56, 50s. Market gets a little bit of bounce and then rolls over and gets the trade gets taken out. Then using the little swing break, swing high, just before the 61.8 breaks down to lows is what gives us the first setup, that next opportunity to get into a trade. And in this case, it's short because we've now broken the 61.8. So whenever a 61.8 breaks, and especially when it breaks and we come down and break the swing low, now that's an opportunity to switch gears and in this case look for shorts. And then that short took us down another 10, 12 minutes or so, and the market moved 4 points off of that one little short. So just because you get taken out of a trade in one direction, that's a very good sign that we could be starting a new trend in the other direction. And so that's kind of how I play a scenario like that where a long breaks and then the short is the new potential trend. Obviously, we don't know if we're at the very start of a big long trend, but the closer we can get into the trend change, the better. So as we head into this week, pretty standard economic news week. We've got this. I'll leave this trend line up here as we go into tomorrow's live trading session. I'm actually going to adjust it slightly here for us and grab some of these lows like so. And then if we take from there and go upwards like this, we can see the shallow trend line, the secondary trend line, and then the very steep trend line that we're in right now. So we'll talk about that tomorrow morning. We'll be doing a live trading session. You can check that out at eminymine.com/VIP. We'll talk about the E-mini S&P, go through some setups, talk about swing trading some stocks, answer any questions you have. So I hope you join in there. And if you have questions, my email is tim@eminimind.com. Hope to see you tomorrow. We'll talk to you soon.